Hey guys, this Satish here, and in the today's video, let's find the differentiation between the equity versus the derivatives. Okay, many people will be, or many students will be thinking that stock market means it's a equity, but you need to also remember, guys. After the video also I shared the type of products which you can consider for trading, or which you can consider for your investment purpose for a long term planning. Okay, or long term goals as whatever you think of. Okay, and in the today's video I'll be giving an very what I can say an very high level overview I'll be giving to you guys. As and when we proceed with this series, for sure I'll try to give more information about each of the product. Okay, so in the today's topic, let's see what is equity and what are derivatives. Okay, this is Satish Narayan channel. In case if you're not subscribed, hit the subscribe button, and this is the series which I started for the CMA students to consider stock market or a financial market as one of their career. Okay, so the first difference between uh, equity and derivative is the ownership, guys. So remember, equity means you are having the ownership on the company for what are the number of shares which you are owning. Let's say you want to have an ownership with an ITC company, so you will be trying to buy one ITC company. Let's say the stock price is 200 rupees, so you can try to buy 10 stocks, 20 stocks, something like that. So in under equity, it's the ownership wherein you will be buying the stocks or shares of that particular company. Okay, but when it comes to the derivatives, it is the price which is derived. Remember, it is derived from the assets which you are considering as a derivative. Okay, let's say you want to trade in futures and options, which is the derivatives. And under derivatives, in case if you consider a future, so futures value will be derived from the ITC base stock price. So let's say the stock price is 200, and 200 will be the price which will be derived from the equity to the futures segment. Okay, so I'll also explain what is futures, what is the options in the future video. So let's as of now understand, under equity you'll be having shares or stock, whatever you call it. Under derivatives you'll be having futures and options as one of the product. Okay, so under just to summarize, under ownership you will be having the ownership with the company. Under derivatives there is no ownership as such. Okay, and the purpose of equity is for long term investment or trading purpose, or whatever the reason it is. But under the derivatives, the purpose purely hits for the hedging and the risk avoidance purpose only. So many people are in the current context, so I see many of the people are considering derivatives as an casino kind of thing. So stock market, remember guys, stock market is not a casino, it is an investment forum wherein people come, invest, try to seek the benefits of the out of the company's performance. So remember, under equity, the purpose is to own the shares of a particular company for a longer term. Under derivatives, the theory says it is for derivatives are for an hedging purpose, but however, people are using this for an gambling kind of product. Okay, so I'll also explain what are derivatives, what are its strengths, weakness, whether you can trade in derivatives, all those things I'll explain to you in the future videos. Okay, so investment amount, so under equity you can try to buy one equity shares. Let's say under our example, see, let's say the price is 200, you can try to have one share, two share, three shares, and what are the number of shares which you want to own for long term purpose. You want to invest that particular amount only. But when it comes to the trading, let's say you want to do an intraday wherein you want to buy today itself, sell today itself. Under that cases, you will be using the margin facility which our brokers will be providing, and accordingly you will be trading in the equity segment. Okay, but when it comes to the derivatives, the investment amount is huge. However, as per the SEBI guidelines, so SEBI you are already aware, right? So it is one of the authority which controls the stock market or the financial market in the Indian context. Okay, so under derivatives the amount will be huge, so you cannot buy one equity shares of let's say one derivative of ITC or all like that. So it is in the lot. So let's say ITC's lot size is 1,250. Let's just an example, 1,250. So you cannot buy one derivative, so you need to buy one lot, that means 1,250 shares of the ITC company. Okay, so remember, the investment under equity is very minimal, under derivatives which is very huge. So there are also, people might say there are margins facility which will provided by the brokers, but remember guys, margin is nothing but a credit facility, guys. So margin means credit facility which broker will provide, but that will be with a huge risk also. Okay, And under equity, there are you might be knowing shares will have two types of shares. One is equity shares and preference shares. But since we are discussing only about the equity shares, under equity you do not have much differentiations or different types. But under derivatives, as I already mentioned, you will be having futures, options. So I'll explain what is a future, why it is very risky, and who can trade in the futures. I also explain to you the benefits of options, how this can be used as your equity, all those things I'll explain to you in the future. Okay. And under the expiration date, so or an expiry date, equity, in case let's say you want to have a shares of ITC of 10 shares for 20 years, that means that will not have any expiry date. You can try to have that share for 10 years, 20 years, 30 years, or until the company is there. Okay. But however, when it comes to the derivative, it will have its respective expiry for each of the months. So as of now, under Indian context, so you will be having derivatives for 3 months. So let's say now it is March, you'll be March, anyway the expiry is already over. There will be 3 months of expiry products under derivatives will be trading. Okay. Just to summarize, equity doesn't have any expiry date. Until unless you want to sell, there will be no expiry date as such. Okay. However, under derivatives there are expiry date. In case if you do not close that product before the expiry date, it will be auto squared off. Auto squared off, nothing but auto selling will be done or auto buying will be done by your broker as per the procedures of the SEBI. Okay. So this is a very high level overview, guys. So equity versus derivatives. So as already mentioned, I will try to start slowly. You just need to understand the basic differences. Once everything is done, once our complete series is done, I'll sure try to give a lot of information where you can interconnect all this theory to your practical and the your study materials also. Okay. So after knowing all these differences, you will be wondering, sir, which is best for the invest or in student. So I already mentioned, guys, equity is the best for the for a student, because it consists of very minimal risk. You can try to have one shares, two, anyway decimal shares you cannot own, so it is a multiple of one. You can try to have one share, 10 shares, 100 shares, something like that. But when it comes to the futures and futures and options segment, that is derivative segment, that has huge loss, and that will, since due to the expiry, it will have lot of volatility, and there will be chances of losing your complete capital. Capital is nothing but the amount or the principal amount which you might have invested. Okay. Having said this, I just try to give a very high level overview. In case if you are not convinced with any of the tie or any of the justification whatever we just discussed, you can try to have a comment in the video section. I'll sure try to help it to you guys. Okay. So if in case if you want to be actively participant in the stock market, you need a demat and a trading account. For that, UpStox is offering a free trading and demat account. You can try to open. Even Zerodha also is having a very beautiful account opening procedures. So you can try to pick the best one and open the account. The link for this two brokers are available in this video's description link. Okay. So in case if you have any doubts in opening the account, please do let me know. You can drop your comments in this comment section. I'll just try to help it to you guys. Okay. So this is Satish signing off for the day, and check care and bye bye.